Everybody, welcome back to another episode of Bitcoin and Markets. My name is Ansel Lindner, and Bitcoin has finally broken out. This is going to be the overriding story of today's episode. The other macro news, I have perused the headlines. I've been on Twitter a little bit today, and there doesn't seem to be too much going on other than this Bitcoin price pump. If you've been following my content for a while, I put out a premium newsletter that is heavy into technical analysis and predicting the price, forecasting the price, I guess I should say. And yeah, it's been pretty accurate. We've been waiting for this breakout, and now we have it. So we're going to look at the charts. Let's share the screen. I want to thank everybody for joining me. Yesterday's live stream had quite a few people tuning in. On Twitter, we had, I think the last I saw was 1,500 views. So that's really good for my Twitter. YouTube still lagging, but it is a new YouTube channel, just a few months old. I had my old one that for years, and once I started live streaming, just back in, when is it, September, October, my YouTube channel got flagged and instantly deleted. I don't know what I exactly said, but I appealed and could not get my YouTube channel back. But I am live streaming over there on BTC Market Update. That's the new YouTube channel, as well as Twitter and Twitch. Vita, which is kind of a Bitcoin-centered platform where you can stream sats and things like that. And also, of course, with my guys over on Telegram. That's my home base where I do most of my posting throughout the day. I do post on Twitter as well. But yeah, so welcome. Hope you're having a great day. Today is the 11th of April, 2023 is my sister's birthday. So happy birthday to my sister. She's not watching, but you know. This is the website, bitcoinandmarkets.com, where you can go and support all of my content. You can sign up for the free weekly newsletter. That's the Bitcoin Fundamentals Report you see there, and it comes out every Monday. And then I have a regular paid membership that supports me to, all the different content I make. And of course, like I said, I have a premium newsletter you can check out. If you want to get a discount on the premium newsletter, you can go to bitcoinandmarkets.com/pro50 to get 50% off your first month. All right. So let's dive right in to the charts. This is a weekly snapshot of Bitcoin, and you can see the latest green candle finally went above this resistance zone that we have been watching for over a month. So it's very nice to see that. There isn't really a ton of resistance above this area, to be honest with you. I have seen some analysts looking at 31,000, 32,000, and I'll draw this line. It kind of goes from January of 2021 through the bottom in July of 2021 through roughly the Celsius collapse and then to today. So that is an area of resistance above the price. Another one would be up here in this general area, right here, 34,500 roughly. That would be an area of resistance, but I'm not looking at these. Okay, guys. Right now I am writing a Market Pro issue. And my problem with, and let me share this with Telegram. Sorry, guys. I get going and I forgot to share it. But you've seen this weekly chart. Okay. I'm not so concerned about this cluster of volume resistance coming from 2021. And I'll tell you why, because it was so long ago. There's not going to be any futures contracts that people are still holding, from back there, where they're just waiting to break even or something. Those are long gone. There might be a few long dated options contracts. I don't know, on the different platforms that you can do Bitcoin options. Perhaps you could have bought a long dated contract for 2 years or even 3 years or something like that. And there might be a few of those, but not many left. Okay. So all of that resistance, there's nothing mechanical about this level that's resistance. Plus, a lot of people still, even though we broke through this, the most resistance area of 29 to 30,000, we broke through that. There's still people that are not buying into this bull market yet. I watched a few YouTube content creators out there, and I know how the Bitcoin YouTube channels are that are all dedicated to, most of them that are dedicated to charts and things. It's just a lot of hot air. But these people are still talking about the possibility that we go to new lows. That this is just kind of not a fake breakout, but that this is within the realm of continuing a bear market. And so, yeah, I don't think people are ready for this to really break out to new highs, and they will be chasing, especially if they're looking at some of these really old 2-3-year-old now levels, trying to find a place, that we're going to have a little correction and then they can pick up Bitcoin back when it drops down to 25. The Bitcoin is not going to be that easy for people to make money. The best way to make money in Bitcoin, and I know from experience, being here for a long time and trying all sorts of different ways, trying to trade different strategies and all sorts of things, almost universally, the best way to make money in Bitcoin is to buy and hold. You buy a little bit more, you up your DCA on the dips. When it falls 25%, you up your DCA. So you have to have a little cash, dry powder on the side, just a little extra that you can dip in a little bit harder when we have those big sell-offs. But that's the best way to make money, and the only way that the market is not going to trick you here. So they're all thinking it's going to drop back to 25, that we're going to test the 25 level again. I don't think that's going to be that easy for people. I have a feeling, and this is there's a lot of indicators, there's a lot of oscillators, a lot of different price levels and things that I'm looking at that I detail in the Market Pro that's giving me this feeling that this price could run away right now. It could actually run 50 to 100% from this level right here. And then people will FOMO in at 45,000. And then it will crash back down to 30 and test that support at 30, So this could get away from us very, very quickly. Let's take a look at some other things. The daily, we were watching this triangle for a while. It seemed to fake us out a couple times, but it definitely, we were watching a price level, this line, if it's still in here, where are we at? Yeah, this red line here. So this, let me copy this, post it to Telegram. This is just the daily chart. And we were watching very, very closely this 28,500. And if we had a daily close above that level, I thought, this could really take off. And what happened? It closed above, well, it took off right as it crossed the 28,500. It didn't even close, give you a chance to get in, to buy this breakout. A lot of people were late to this breakout. I saw commentators coming out, and this was 4 hours after the breakout saying, hey, we got our bull move. Let's, get in on this. And not, it's already all the way up to nearly 30,000. But anyways, so this is looking very, very strong. Another thing that I have been measuring out is Fibonacci's. And let's see if we get this Fibonacci tool out here. If we just go on this most recent move, the 1618 extension is up here at this level, 34,500, that some people are looking at. Let's draw some more Fibonacci's, because this is amazing with what this tool can actually do. So let's go to the weekly, and hold on, reset this. Let's go back to this 2017 top and bottom, and we're going to measure this out and zoom in a little bit. So this 2019 run that I have been looking at quite a bit over the last 6 months, look at where it dropped right into the retracement golden pocket between the Fibonacci 618 and the 2/3, the 66%. Dropped right into there, pulled back. But you find this type of measurement everywhere on the chart, everywhere. And so I had a whole issue of my Market Pro just looking at Fibonacci's. And because once we go above this 30,000, which we have done now, where's the next level? There's nothing really horizontally. I mean, maybe you could say this 34,500. You could also say up here at 45, 46,000. That's another level. But I have this saved on here of this one. So this box is from that issue of the Market Pro where I'm going through. I probably do a dozen different Fibonacci's, and from historical back testing, these type of things, where Bitcoin likes to go. And this is where I have my next target, 48,000. So like I said, this could tear people's face off, go all the way up to 48,000 before we have a correction. Don't forget either that we do have the halving coming up, which I have listed here. My most recent estimate that I saw was end of March 2024. This type of move would match very similar to this move 18 that took off 200% before the halving. And then of course we had COVID and all this other stuff in 2020. But we could see something very similar to that, a quick rise to 48,000 and then back down. Oh, and let me share this box with my guys over on Telegram. This is a chart heavy show. But okay, so this is Bitcoin. This is what I'm looking at. If we do have some sort of crazy pullback here, which I'm not expecting. Let's take a look at the EMAs. We have the 50-day moving average crossing this important $25,000 level. That 25,000 we got from this high back in August and this high in February. That was an important level to break north of, and we did that. But now the 50-day is moving above that 25,000. So if we do have a pullback to the 50-day, which is not crazy, I don't think it's going to happen right now in the next week or two. But if we do, even that 50-day is now above the 25,000, which would be the ultimate support of this move. The 200-day is sloping upward now after this miraculous bounce back on the 10th of March. And let me publish this to Telegram. All things are go. I mean, we can look at other indicators like this is the Ichimoku cloud with extended settings. If you're one of my Market Pro guys, I have detailed out why we use extended settings. It has to do with the market nature of Bitcoin being 24/7, 365 versus other markets. But you can see the Tenkin is popping out above the Kijun, which technically would be a recross above a green cloud, lagging span above price. This thing could take off right here. Let's go back to another time where we've seen something similar to this. And this is back right before the big run up in 2020, at the end of 2020, roughly September, October. This would happen October 17th of 2020. Sorry, I'm kind of messing with this chart here. But we have a recross of the Kijun with price above cloud, in a green cloud, lagging span above price. And I will share this to Telegram. These are the type of charts that you get on the Market Pro too, when I'm looking at this type of historical stuff and how Bitcoin is reacting here. But you can see that once this happened, once we started moving up and we started testing some of these resistances from back August, September, once we broke up here, guys, it was lights out. I mean, the price continued to go up and never look back for 2 months. We could see something very similar to that right now, and nobody is expecting it. Nobody is prepared for this. That's why I think it could happen. All right, let's take a look at a few other markets before we sign off for the day. Like I said, this is going to be a quick just chart update. I'm writing that. Let's take a look at the dollar. I think I talked about this yesterday, I think it was yesterday. And I said this move looked to be like setting a bottom for the dollar. It is red on the day for today, but, we can't get ahead of ourselves. I said I wasn't going to be happy until, or consider this a real turnaround until it passed some of these levels up there, 103 area, and it has not done that yet. So we're still waiting on the dollar. But if you're new to my content, which some of you might be, because I've been getting a lot more views over there on Twitter, on the live stream over on Twitter. I'm one of the only dollar bulls in the Bitcoin space. And I've been a dollar bull the whole time for the last, I would say, even pre-COVID. Starting in 2019, maybe even 2018, I'd have to look at my content going back that far. But there was a point when I questioned my assumptions, and I came to the realization that, no, the end of this dollar-based system is not inflationary, because the Fed and the government, they don't really have the power to print money. The Fed can print Federal Reserve notes, like actual cash money, but they don't do that. They just create reserves that are held at the central bank, and they're not fungible forms of money. They're not actually money. You can't buy a sandwich with reserves held at the Fed, and that's how they quote unquote buy securities from the primary dealers. What QE is it's an asset swap for a treasury, for a reserve held at the Fed. But you can't buy a sandwich with a reserve. You can't invest a reserve into, some line of business. A bank that holds reserves at the Federal Reserve, they have to go through the market and transform that into actual dollars, into actual usable money in the financial system. But when it's sitting on the Fed's balance sheet as a reserve held at the Fed, that is not money. That's just a book entry. I don't know why it's so hard for people to understand that, but it doesn't count. All right. And then fiscal spending is not money printing either, because they borrow that money. They borrow it. It already exists in savings. They're just pulling it forward to have demand today. So it has it tricks the market. It has an inflationary type effect, but it is not technically inflation. It's not money printing. So anyway, the end of this system is not an inflationary collapse. It's a deflationary grind. And I started talking about this back in, like I said, 2019, maybe even as early as 2018. And I've been a strong dollar advocate since. The only one really during COVID and all of this, during all the quote unquote money printing and the extraordinary stuff from the Federal Reserve, pretty much the only guy in Bitcoin and only a handful of people in macro forecasting at all that was talking about a strong dollar. But I'm still there, okay? The dollar can weaken temporarily, but overall, the end of this system, the overall pressure and I guess not trend, but the overall force is towards deflation. And it takes extraordinary measures from the government and from the Federal Reserve just to stem the tide of deflation. That's it. And if they want to ever go hands off and return to normal, what's going to happen? It's going to be a massive deflationary shock. And I saw some numbers out. Let me see if I can pull these up here, because this was actually really good. Article out. So this, and I did post this in Telegram, guys. So the headline is Inside the Credit Crunch, biggest drop for small business credit availability in over 20 years. And these articles have a lot of fluff, but let's get down to the meat of it. Down here, it says, but we found most notable in the context of the credit crunch is how difficult it was for small U.S. businesses to obtain a loan in March, after multiple bank failures led to a further tightening of credit conditions. And I've talked about this for months, going back to some of the Fed survey data. It's called the SLOOS data. They survey banks, domestic banks, foreign banks. I think they probably survey businesses as well as part of that survey. But they say, hey, what's going on with your credit standards? Are you tightening credit standards or loosening credit standards over the last 30 days? It had one of the fastest tightenings on record for U.S. banks, and that was shared with foreign banks, as well as demand for loans was falling at a record clip as well. Now we see that coming through in other data. U.S. businesses, it's a small U.S. businesses, to obtain a loan in March after multiple blah, 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 tightening conditions. So it's being very difficult. According to the NFIB, a net 9% of owners who borrowed frequently said financing was harder to get compared to the 3 months earlier. The most since December 2012. So this is some of the hardest credit conditions out there since 2012. Over 10 years. Worse, the 4-point monthly drop in the series was the biggest collapse in credit availability in more than 20 years. And let's take a look at this chart here. Small business credit conditions, availability of loans. It is crashing through the floor here, but it is not as bad as the Great Financial Crisis yet. But it is, like they said, it is the fastest pace since going back to 2002 here in this in that little period after the dot-com. But this would fit. Okay, so think about this too. Going back to 2012, when they talked about this was the most since December of 2012. What was right before 2012? Well, that was the Great Financial Crisis. All right, and then this chart was showing it is the biggest monthly drop since December of 2002. What happened right before 2002? It was the dot-com crash. Okay, so if we're looking at this specifically, we could say that, yeah, we're after the COVID crisis. Not that there's a imminent recession ahead, but that there was a recession that we just got through. I think that's what this is kind of leading me to believe about this. But overall, I want to take this back to the dollar, because if credit is collapsing, the dollar is going to strengthen, because these players, they need these new loans to service their old debt. The debt that's being repaid, extinguished, that's money going out of the system. That is set. That's locked in. You know, my debt burden or my debt service is I have to pay 5% on this loan every month or whatever. That's locked in from previous activity. But what's happening right now is new loans are not being created as fast. So this is a net negative money creation. More money is being repaid than taken out in new loans. It's net deflationary. Net deflation, I guess. It's not even deflationary. It's net deflation. The amount of credit in the system, which money is credit today, is going down. So this is a big sign for that. Okay, let's move back to the charts and let's take a look at some other things. US 10-year off the lows, back into its happy place. What? Did not expect that to happen that quickly. It's still kind of in this downward trend here, but it's back into this gray box from that I put in here last week. So we'll see. I kind of expect something like this to come down to a new level. Maybe, let's say, down in here. And I'll leave this on the chart and see how good I am at this. Copying that. Sending that over. So this is what I expect here. I'm not seeing imminent collapse in this chart either. You know, what's going to happen when we are hitting an acute phase of a crisis is, especially like the 10-year, and we'll see the 2-year do this as well, the yields will just fall through the floor. We might see, you know, multiple days of 20 basis point moves lower. And we're not seeing that right now. These big moves, you know, going back to the Signature and SVB, and the market has kind of stabilized at a lower level, a little bit lower level, but we'll see if we can get down here to this. Now, why would this be good for Bitcoin? Because first off, Bitcoin has done very well during, you know, since the great financial crisis, since its launch, when we've been in a dollar shortage, and the dollar has generally strengthened over that time, been in zero interest rate type environment, right? And Bitcoin has done very well. So if we have a period where we're going through more deflationary stress, people are going to search out for, I mean, it's not acute, it's just deflationary stress. That's a very important distinction. When we have an acute deflationary shock, yes, Bitcoin will drop because people are fleeing to the dollar. However, when we just have a deflationary stress, a dollar shortage stress in the system, people are going to search out monetary alternatives. And that's one reason why we see a lot of stuff going on right now with BRICS currency and with certain countries trying to diversify away from the dollar. We just saw another thing this morning about Macron saying we need to get the extraterritoriality of the US dollar under control, move away from the US, you know, being the protector of Europe and that sort of thing. So this is just the normal type of reaction that we would expect to see as people are, the herd animal that people are, is moving away from this deflationary grind that's almost, you know, depression-like, in search of a monetary alternative. That's why Bitcoin has done so well. So we should expect Bitcoin to do well, stocks to do well. I think housing will turn around. Housing will be very resilient in the US. Commercial real estate, I don't know about, and I'm much less versed on housing than I am, say, on currencies, but you know, we're going to return to a post GFC normal. That's what's going to happen. All right, let's take a look at oil. Let's go to the daily chart. Pretty big green day today. I saw a report where they said that Russian oil unexpectedly crashed week to week. So that could be affecting it this morning. That big jump where you see the arrow was from a previous discussion on OPEC and what we can expect following an OPEC cut like we saw last week. But really, no change to the oil market despite this OPEC cut, despite, supposedly China reopening, and there's all this global demand just around the corner. We're not really, the globe can expand, the global economy can expand, but we're not seeing that in the oil chart at all. And lastly, let's take a look at stocks. Green on the day. This matches with a green Bitcoin on the day. Not a huge breakout to new levels, but it's getting close. And I expect stocks to follow Bitcoin. Bitcoin has been the signal for much of the last year or two. It's led the stock market moves. And if Bitcoin is going up right now, breaking out, I expect the stock market to follow suit. All right. Let's go back to, let's take a quick look at the Ethereum chart. Because they do have, tomorrow is supposed to be this Shanghai hard fork, right? So we'll see. But right now, ETHUSD, it's roughly at the same level that it ran up to. So if this chart, if you go back August, September of last year, you're seeing kind of the same levels from back here that we're seeing here today. And we had to sell the news event with the merge. Now we're seeing this Shanghai fork that's supposed to be coming in. And yesterday I was mentioning, if you have Ethereum locked up and the SEC is coming after all these unregistered securities, you would be, I think, you locked up your Ethereum a year ago prior to all the merge stuff. You got the pre-stake going on. They offered a stake for a long time. I think maybe even 18 months ago, people started staking Ethereum. And now times have changed. The SEC is coming after these people and risks have changed. Now, this Shanghai fork now allows me to unstake. There's a higher likelihood that people will unstake and dump their Ethereum. Especially Lynn Alden had a great comment that commodities don't have to wait for paid developers to make a fork to unstake. It's obviously a security. And this unstaking process that they're going through makes it even more security. So the uncertainty has gone up, and I think a lot of people are actually going to unstake and dump this. We could come in here and do some TA, but I'm not going to waste your time on that. That's what's going on. And the ETH BTC is selling off pretty hard here, down to 0.63. And I don't expect that to go anywhere soon other than down. You can see from the merge back here to today, it's just down, down, down. I think one thing I'm trying to push out there is that Ethereum made a big mistake. They went for minimum viable issuance when their ecosystem was based off of artificial stimulus. Altcoins are just excuses to print money. That's what altcoins are. I mean, they're also, to steal your Bitcoin, but they steal your Bitcoin through just an excuse to print money. And all of the hype, all of the marketing around it was enabled by the printing of money, period. And then what happens when you take this inflationary stimulus away from Ethereum and the Ethereum ecosystem? I mean, Ethereum inflation was the inflationary stimulus behind most of this stuff that these other Ponzi inflation schemes, but now you take the base layer out, which is the Ethereum inflation, and you exchange it for deflation, minimum viable issuance. I think they're going to come to the realization that they made a big mistake and they should have targeted maximum viable issuance. But anyway, it's all going to zero. It's all going to zero versus Bitcoin anyway. Okay, let's see. That is it. Let's check in on the Bitcoin price once again. Sitting at 30,227. We'll see if my call is correct, like that this price can run away from us, and FOMO hits for people around 35 to 40,000. They get in, and then that's when it has its correction. So we'll see if that is the case going forward. Anyway, that's going to do it today, guys. Thanks for joining me. My name is Ansel Lindner. This is Bitcoin and Markets. I try to live stream almost every day. And as you can see, I'm all over the place. Sometimes I have really set topics, like we cover certain articles and read through them. Other times I concentrate more on the charts. Sometimes I just let my macro geopolitical stream of consciousness happen. But check it out. Join us here almost every weekday. I'll do live streams. And on Thursdays, I join CK and Bitcoin Magazine on their channels for a FedWatch episode where we go through central bank updates. But anyway, that's it, guys. Thanks for joining, and I'll see you on the next one. Bye.